The triple witching repositioning at the OPEX last Friday is done. The AAII sentiment survey is still on the very bearish side. It's the fourth week here in a row, while the long side is still sleeping, but seasonality tells us in the regular pattern and also during the presidential year that the low's supposed to be in. I tell you what's happening at the DAX and at the US markets. Let's hop into it. We're gonna start off with seasonal patterns concerning the DAX. This data here is provided by my partner wallstreetkorea.com. I put a link in the description below if you want to subscribe that service. They have great research and data concerning various markets and smart money, volume, put call ratio, you name it. You find a lot of great stuff there, but let's have a look at that chart. It's a zoom in of the period between January and May, and this year is what happened so far for this year. And the dark red line represents the presidential year. It's data from the Dow Jones only because it's the oldest index in the world and provides data for the last 100 years. The regular pattern of the DAX, that is this line here, let me just check, yeah, it's this blue line here, and it suggests a low in the middle of March. We have seen a low on the 11th of March already, and that might have been the low coming from that all-time high. A very quick dive for just a couple of days, but that could have been the March correction, considering this seasonality patterns of DAX. By the way, it's basically the same for the US market. So all these regular patterns, or even the presidential patterns, they suggested a low even earlier in February, at the end of February, and this one, the regular patterns are saying the lows are in. And this time I'm gonna start off what I told you last week. I said we will most likely see a new all-time high. We did. DAX made a new all-time high by 1 pip higher. And then, he sold off again. Here you get an idea what I do at my Discord. Here on the left you see various channels. This one here is a DAX channel. It's our H1 thread. By the way, if you want to join us, you're welcome to join at www.jcs-charting.com. It gets you onto my website and you can buy there 1 out of 2 packages, a basic and an advanced package. In the advanced, this year is the advanced, by the way, where you have several channels, and that is what it looks like. Last week, that was from the 17th, that was the beginning of this week. We had plenty of bullish sequences, which we all completed. Here was a nice shoulder pattern, by the way. I give you all these targets. Here was another blue sequence within it, and we took a lot of profits before that selling started. Here's another setup I give to my members, and well, it didn't really hit these targets. We made that double top, and I just want to scroll down here a little bit to tell you what happened last week. That here was on Thursday, and DAX was at a very crucial point. We had, for instance, that trend line here connecting these two lows from the previous week. And on Thursday morning, we actually bounced off that trend line, and that high here we made on the previous week. And DAX initially bounced off that level And I said, well, while checking on volatility, the VDAX, it could be a giant bear trap. That worked out initially, but then the day after they sold off again. That red sequence here we had, by the way, it didn't trigger on Thursday. It triggered then overnight on the next day. And you see here there are plenty of updates. Bulls were defending that 100% line. We didn't get that H1 close below. And then that was the update on Friday morning. You see DAX was already testing in the pre-market that trend here once again. But what was more important, that red line, that red 100% triggered. So we knew the min targets are about to be hit. And I gave my members that hint that that red zone is about to get filled. And during the entire day, DAX was just not only oscillating, it actually went deeper and deeper. I gave my members, I believe it was 22,710. At the cetera, it was a bit more precise, and that is what happened in the end on Friday, just before 9 o'clock in the evening. We bought these lows here, and then DAX went all the way up to that trend, and it was playing the after hours right at that line. And this is now a 15-minute chart, the cetera indication of the DAX, and I just wanted to show you how accurate these lines or these levels work. We use, you see here these gaps, and that was a close just into the late OPEX. Here's that 100% line I was talking about earlier, 22,930. It was on the JFD a little different. I think it was 922, and the levels for the JFD, they also were lower. But on the cash, these lines were actually very precise. The low was actually 22,723, and that second min target, the 138, the red one, got hit here not only once, twice, a third time. Before DAX started to turn around. As I mentioned, we were hedging here actually a little bit on the downside to drag our long entries down, and I kept on buying these lows here as well. There was a nice bullish Wilbur wave wedge here shown in blue. The first target line got already hit. I assume we're going to see the second or the main target line to be hit on Monday as well. We're going to stay with the cetera indication. This here is a 4-hour chart, and two things I just want to show you here. The level we just talked about, the 22,723, was also a perfect 61.8 retracement on the dot, considering that rally we had from March 11th into March 18th. So, and by the way, it was a perfect 1, 2, 3, 4, 5 impulse to the downside. And my members know already, I assume still that this low here was a major wave 4 in a flat correction. That was an A, B, C, an overshooting A and overshooting C, makes it an expanding flat. And I still assume we are actually running higher to new all-time highs. Even we made one already last week. I think this here was just the first impulse, and this is here wave 2, and wave 3 is about to come. By the way, there's also a potential ascending triangle here shown in blue. If that trend line is holding for next week, we need another touch here at that horizontal resistance, that double top here at the all-time high at 23,475 in order to trigger that pattern. And then we could say it is, or it was simply just a triangle consolidation on the way up. And we're going to fly through the US markets quickly. This is here the Dow theory. I came up with that already last week. At the top you see the industrials, at the bottom you see the transportations, and there is a double divergence. The transportations actually made another low on Friday. The industrials were actually far away from that low here from the previous week, and so we don't even have these two giant divergences. There's actually another one. So we compare that low here to this one, and let me just get this error here, and we have compared that low here. Both made the low here on the previous week on the 13th, and the transportations actually went there below. So there's actually a triple divergence at the Dow theory. So usually these divergences, they build up for a couple of weeks, sometimes just a few days. So I assume the Dow, especially the industrials, are about to run higher. And here is another daily chart, a cash indication of the Dow Jones Industrials. What you see here at the bottom are the cycle brackets, and the Dow is actually running in a very clean cycle. The low it was here suggested on the 13th, and the low actually was made on the 13th. So that pattern is still basically in sync. And there was also a nice hit of that trend line down here. It was somewhere between the 50 and 61.8 retracement from that rally from April last year to the all-time highs, which was also a double top. Though needs to break that trend line here, that bold dashed line, in order to run higher. There is, considering my system, already a magnet at 42.848. We have to be a bit careful because concerning another cycle theory, considering primary cycles, because I still believe that here was a start of a whole new primary cycle. That whole thing turned bearish. There might be an exception that primary cycle actually expanded, and that here was that low. That would be an exceptional case. It doesn't occur that often. But we have to be open for that, otherwise we see more selling into the next low, which is due in June. NASDAQ 100 daily chart cash indication. I was showing that last week already. The cycle low, the suggested, was a bit late. It was the same date as a Dow Jones. This one here was suggested at the beginning on the 7th. However, we were hitting these min targets of that red sequence, which was aligned with the 61.8 retracement of the August rally to the all-time high. Now, while looking at these daily candles, it doesn't really look bullish at all. It actually looks that NASDAQ is actually preparing for another leg down. There might be the chance to hit the 161.8. That's still an open target. However, while checking on order flow and also smart money, big guys actually started buying here. I know it doesn't really look that bullish, but while we check on the past, this one here looks actually similar, and out of a sudden there was a large gap, and then that rally started. And we had a similar setup once we go all the way back to these lows we had in October of 2022. That didn't really look bullish at all, and it was a setup for a giant rally. It started here in October 2022, and that never actually, these lows got never seen again since then. Yeah, we're gonna scale down the time frame to the 30-minute cash indication. There is still a bullish setup with that bullish Wilbur wave wedge here. That target line looks very promising, and we also have a magnet at 24.32 once we break out of that channel. That channel has to be considered as a bearish flag channel so far. There is a double bottom support here, that red line, which is right in that golden pocket between the 61.8 and 76.4, which is that green zone. And that channel here is very precise. It looks presently still not really strong. But once we get up here and break out, I would be very careful with shorts. Of course, other way around, once we break down here, I'm pretty sure we're gonna see new lows. Yeah, and just to give you an idea how accurate our levels are, this is the H1 JFD indication chart. I use mainly that time frame to trade. We had very nice long setups here last week with several sequences, and this one here, for instance, the red one, got triggered right here with that candle. Got triggered below the 19,595. So I told my members most likely we're going to see at least the min targets, which we saw quite early at the pre-markets. And then that's here the opening candle of the cash. And it went all the way down. It missed out by just a few points, 5 bips, to complete that whole red sequence. And then we went all the way up and we triggered higher at 19,729. Members know that we have now a new min target zone. And last but not least, a quick look at the S&P 500 30-minute chart here, cash indication. Same Wilbur wave wedge as at the NASDAQ. Nice, promising target line here. There's a magnet at 5826 already on. So this is here actually my minimum level to be hit. We have also that very clean bearish flag channel right now. So, and also that double bottom here, right in between the 50 and 61.8 retracement. So the S&P 500 didn't get down as much as the NASDAQ 100. So we need to have an eye here on that channel. Once it breaks down, watch that golden pocket here between 61.8 and 76.4 for a reversal. If that doesn't hold, we're going to see new lows. But I am also here more on the bullish side, considering also that AAII sentiment and also the order on volume flow. Smart money kept on buying here a lot, by the way, right here and right here. Of course, there was a lot of repositioning during OPEX. But once we go all the way up here, I would be very careful if you're still a bear. And same chart I just showed at the NASDAQ as well. It's our hourly chart, JFD indication we mainly use for trading. We had great setups here on the long side last week with green sequences. This here was our last setup. That red sequence here got triggered right with that candle, and then we were hitting the min target at the pre-market. And here you see once again how precise these sequences work. 5601 got hit on the dot, and then it reversed. And it triggered higher. 5664 is triggered. So I assume that rally here, that it's not only a bounce, that should continue on Monday for higher levels. Yeah, that's about it. Didn't give you too much information, but I think enough for the weekend. If you want more data, more research, and more analysis on stocks also, I do that for advanced members. You're welcome to join my Discord. And if you like that video, you are welcome to give me a thumb up or leave me a nice comment. And I see you next week. And I see my members most likely tomorrow. I'm gonna write a few more important things for them on Sunday. I see you next week. And yeah, have a nice remaining weekend. Bye-bye.